You may be wondering how you can trade with price action. You may be thinking to yourself, I want to trade with price action. I want to become a profitable trader, but I haven't managed to do it correctly yet. And I've paid millions of rands for courses and I'm just not getting to the bottom of it. Well, today I'm going to take you to the charts and I'm going to show you with my 30 years of experience how I trade price action, how I've always traded price action, and how you can become a profitable trader. But what is price action? What is trading with just the price without indicators? What's it all about? You know, guys, at the end of the day, it's all in the head. It's all in the psychology. I can show you as many lines as you want to see. I can show you as many squiggly lines, as many little block candles, as many little things on the chart as you want to see to make it sort of interesting for you. I can make things move on the screen so that it gets interesting, and that's probably why most of you like to trade on 5-minute charts, because the charts are actually moving. They're moving for you and they're interesting, you see. Now, here's the thing, guys. Making money for real should actually be quite boring. You know, watching charts and watching candles move up and down is not going to make you money. And the thing you have to understand about these charts is behind all those squiggly lines and candles are real human beings, and that the market is a 50-50 game. But I'm going to talk to you about that after we've had a look at the charts, after we've had a look at how we can trade, how we can make money, and how we can become profitable in the stock market, how we can work with price action in the markets. And then we'll also talk about the fear, the 50-50 principle, and why it's important to have a business plan when you're trading and what that business plan is. Don't worry, it's not complicated. It's not a 20-page document. In fact, you don't even have to write it down. You know what? You just have to have it in your head. That's all you need. You just have to have a set idea of how you're going to make your money. And after we've been to the charts, I'm going to talk to you about that set way that you're going to make your money and how it's possible. Also, after the charts, we'll get to your free gift and we'll get to what we do with trade of the day and that sort of thing. So without further ado, guys, just remember, trading's risky. 80% of traders do lose money. And if you don't like risk and you don't like losing money, you probably shouldn't be trading. And you need to know this. You need to know that trading is not simple, that you're not just going to get into the markets and take on the whole world and make a fortune. It doesn't work like that. But guys, let's go to the charts. Let's see how we do it on the charts, and then we can talk a little bit further. When I used to start trading with price action, we didn't have all these fancy computers and all this fancy technology to do it with. That's why I keep it simple. That's why I don't need all these fancy indicators that you get with the charts that you guys are all using to try and figure out your trading. For me, there is 3 ways to trade. The first way is to trade with the trend. So if you've got a trend, you've got structure in price action. So you've got this going up, structure up, structure up, structure up, and it goes up and it goes up and down, up and down. What you're waiting for is for the next little pullback and you can go long again. Trading with the trend. So that's the one way that you can trade in the stock market. We get these levels from the daily, and I'll show you how to do that now. So we get the main resistance, the main support level. On this particular, the US 500, this was a resistance for a long time. It broke through the resistance. When you get a breakout, it tends to head up on that direction, and this now becomes support. Simple as that. But normally we have the support and the resistance drawn in. I'll show you that in a short while. The DAX, similar thing, trading in a trend. You can see here, it broke through the resistance and off she went straight up. That's a lamp pole formation. There's a little flag pattern developing at the top there, and it could fall back down because that's what flags do. But that's the first way of trading in the trend. Then there's trading in the range. So for example, this is the FTSE and it's trading in this range. What do I mean by range? What we do is we go to the day chart. I'm going to show you how we get these levels, and we put it on a line chart. Then on the day chart, we take a resistance level and we draw it in. How do we draw this in? The reason I use a line chart is because we use the closing prices to get the levels. So we want the closing prices. We could have taken it up the top there, but this looks like it broke through a little bit there, and that's your main area where it keeps. You see here, hits. That's your areas where the resistance is. I draw the block a little bit deeper just to give me a sort of fair idea of where the price could end up at the end of the day. and the price could end up inside this block all the way up to that level there. That's a general area. Don't think of a line as an exact area, because the market doesn't care about your little lines or your little squiggly marks or whatever the case. It's traders that are in the background that are trading. Remember this. Then you draw a support level in the areas where the price has hit a number of times. That's now a support. And now what you find is that this FTSE is trading in a little range here. But what you have to also identify is that it was to the long side. So this is a bit of a flag pattern, and flag patterns usually resolve to the upside. So this will probably end up breaking to the long side at the end of the day. Always bear that in mind. Put it back on the candles. There's your picture. It's trading in that range. Now you want to trade on whatever time frame you're trading on. In my case, it's the 4-hour chart. I'll bring the 4-hour chart up and I have a look at it and I think, well, if it gets back up to this resistance level again, then I can take a short trade going back down to the support, most likely because it's trading in a range. So that's your second way of trading in the range as such. So you're in the range, you can trade it. You can add levels in your 4-hour chart. So for example, you might want to look for a demand level. You might want to look for a supply level. You might want to look for trends. You might want to look for fair value gaps. And I'm not going to go into detail on those particular items today, because today we're just talking about price action and we're just talking about support and resistance and the simple way of trading. Because if you start going into fair value gaps and all that type of thing, I have got a video on that. If you want to go back and you want to have a look at it, I'll explain all that to you. I've got a video that explains supply and demand to you. So if you want to go and have a look at those, please do. Please go back, have a look at that, where I show you how you can trade a fair value gap or supply and demand. We don't need to use that. It's not necessary. I keep our trading simple. And then the third way of trading is to look at overbought and oversold levels. What you've got to be careful with on overbought and oversold levels, and I don't need an oscillator or a stochastic or an RSI to show me that it's overbought or oversold. Clearly this gold is going to be in the overbought scenario because it's all the way at the top. We know that this is extremely high. So what we're looking at here is, what are we going to get from this? Is this going to be something that you can short? And so many guys to me have said, can we short gold now? Should we short gold? But what you've got to look at, guys, you don't just short something because it's expensive. This is not a supermarket. They call it the supermarket mentality. If something is cheap at the supermarket, you buy it. If something's expensive at the supermarket, you wait until it's on special and you don't buy it. That's the supermarket mentality. Difference with the stock market: if something's cheap, there's something wrong with it. If something's expensive, it's a really good thing to buy. That's the difference in the stock market. So what you're looking at here, gold is really expensive, for example, which means at the moment it's in favor and it's a really good thing to own because it's probably going to carry on getting more expensive. That's the point. But if this was to come down and break this structure here, there's structure. If it goes through that and breaks that structure, then that's when you look for a sell. Or if you go to oil, similar scenario. This is on a downward. It's been going down in structure, down, down. If this now goes back, breaks that structure and heads on up, then it becomes a long trade. So what you've got to identify with these heavy trends, with these serious trends that are down like this, what you've got to identify is, where does it break the structure? Well, it's quite easy. You just draw a trend line in. That's your trend resistance, and breaking structure will be when it breaks through that line, comes back, tests it, and then it will carry on to the upside. That's what breaking structure. How to identify structure is broken. It breaks through that trend line, the structure is broken. Easy. Let's go to gold and do the same thing, right? So you want to know when the structure's broken. Structure's broken only when it breaks through that line. So which means it's got a long way to go. It's got to go all the way through here before your structure is effectively broken and it's going down. So you're waiting for it to break that structure. So that's how you trade the three different products. Effectively, what you're doing, you're looking for an easy way to trade the price structure. Now, if you go to the US 500, for example, the easiest way to trade this will be to wait for it to come back a little bit into the structure and then go long. And that's just going to continue on upwards because you've got the upward trade. But if you're looking to trade, for example, the euro US dollar, you've got a different scenario here because this has gone up, gone into a range, and in that range it should resolve to the upside because this is a bit of a flag pattern. If you take this to the day chart, you can see the flag pattern, how it's developing here. You've got your upward trend flag and it should continue on up. Price structure is it's gone up, gone down here, buy, 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 gone up. It needs to go up through this resistance, which will probably do, it'll break through this and carry on up. That's why you end up with these little flag patterns all the way through. Those little flag patterns are where they break to the upside and continue on with the price action structure. You don't need these drawings to see that this is going to the long side. We take it to the 4 hour so we can get our sniper entry and we can get our trade in. What we're waiting for is for this to break through that resistance and give us the long trade to the upside. That's how you trade with price action. These levels, as I showed you, we get off the day. This level, I'll take off this 4 hour chart. That's a demand level. And the reason I put it in there is so that I can see if this drops off this resistance and comes down, there's a really good chance that there's money waiting in this area and it'll most likely come into this area and bounce back up again, giving us an upward trade. Just be very careful of those. So don't ignore these little levels within your time frames because they are quite important. Great British Pound US dollar, same thing. You've got your price action structure. Up she goes, down she goes, up she goes, down she goes. You see how you identify it? You put a couple of trend lines in, trend resistance, trend support. It's like a little railway. It trades within that railway and you're just looking for the price on that railway either side. Now, when it's doing this, going long, what you do is you only take long trades. Don't take short trades. You can, but don't, because you're trading against the trend if you take a short trade. It hasn't broken structure. So on this, only take the long trades going up. And as long as you're only taking the long trades, it's in your favor and it's going up. You see here, there's the long trade. It bounced, it hit there. There's your long trade. Up she goes. Perfect. That's exactly what you were looking for. This was a trade that we had put in the past. US dollar, Japanese yen. Now, you see here, this is where structure has broken. When this candle closes, not now. You have to wait for the candle to close. Why do we have to wait for the candle to close? Because it could do this. You see here, there's a little tail. It could just leave you with a tail and then you've got no trade. So you've got to wait for this candle to close with a body on the outside of that trend support. Then you know that this has just broken its structure and it's probably going to head in the other direction and go short. Watch out for that. Don't preempt your trades, because if you get in too early, you get in here and you think, oh, that was a red, and then it turns into a green candle and it gives you a long tail. That tail is meaningless. It's not even a closing price, and that stays within its structure and carries on going long, and then you lose all that money up there because you went short here. You go short here, could do the same as that and carry on long all the way up. So what you're hoping for is for that to close there, and that gives you a very good idea that this is broken through its structure. So now you've seen the charts, you know what it's all about on the charts. Now let's talk about the principles behind becoming profitable. You know, understanding that you need a business plan starts with understanding that the market is a 50-50 game. 50% of the time when you take a trade, you could win. 50% of the time when you take a trade, you could lose. How's that possible? Because you've got a system that should make you a winning trader. Your win rate is meaningless, and this is where the business plan comes in. Your win rate is meaningless. You can have a 90% win rate but not be profitable simply because of the big losses and the small wins. What you need to do is you need to lose less on your losses and you need to make more on your wins. You need to have those big wins, those trades that run and make you a fortune. Where are those trades? How do you get those trades? And how is that even possible? Well, the business plan is simple, and it's basically a two-step business plan. So you don't need to write it down. You don't need pages and pages and pages of stuff. You know, I see so many traders spend their time. I don't say you shouldn't have a journal. Of course, you know, you want to record your trades, things like that. But they spend more time creating systems to write their journals and their business plans and their goodies and whatnot than actually trading, which is ridiculous on its own. So if you're going to create a business plan, just have something in your head. Simple, like mine is a two-step business plan. And my business plan is simple. And that is every single trade that I take on a $100,000 account will have a maximum $1,000 stop loss. And then I will not move that stop loss away from that $1,000. I will, when it goes into profit, move it up into break even and then keep following my price up like a trailing stop. That's where I'll move my stop, but I won't move it down. I won't move it away. I won't say, ooh, we're going to get stopped out, let me move the stop loss. I won't do that, and I will not add to a trade, and I will not hedge a trade. If I make a decision on a trade, I made a decision on the trade because I believe that that trade is going to be successful. That's going to be a successful trade. That's my plan for today. That trade's going to work out for me. But if it goes against me, I'm risking $1,000 on that trade. I know that I've paid that $1,000 for that trade. And if it wins, I need to make at least $2,000, not $500, not $600, $2,000. Now, the only way that I'm going to make less than that $2,000 is if I've moved my stop loss up to break even because it's gone into profit and it comes back and takes it out, or it's moved up even higher and I've moved my stop loss up even higher, causing it to get taken out again, and then I only make $500 or $600 on it. That's where your win rate comes in, because then you're going to look at your win rate and say, I've got a 70-80% win rate. I'm a genius trader. But all those trades that got taken out on that stop loss are showing on your win rate as a win, $600-700 a time. But that's not your policy. Is to make $2,000, because every time you lose $1,000, it gets expensive, right? So part one of your business plan in your head is keep the stop loss constant, $1,000 or less. End of story. Your profits $2,000 or more. End of story. On a $100,000 account. If it's a $25,000 account, then $250 stop loss, $500 win. But effectively 1% of your account. Now you'll say, if you have 10 trades, then you've got a $10,000 risk on your account. And that's true. But just think of this. It's spread across 10 trades. And I told you that trading is a 50-50 game. So 5 of the trades you should win, 5 of the trades you should lose in all probability. If you lose all 10 trades in a row, you've had a really bad day, week, or month, or whatever it is, how long it takes you to take 10 trades. I mean, it must be really bad to lose 10 trades in a row. And it's like if you win 10 trades in a row, you've got to be super lucky. The chances of you losing those 10 trades in a row with your system shouldn't be. You should still have a higher win rate at the end of the day than lose rate. But your chances in the market are 50-50 of making that profit in all probability. So the probability is I'm only going to lose $1,000 on 5 of the trades, and I'm going to make more than $2,000 on the other 5, hopefully, at least a decent profit. So now you've got that part of the system in place. The second part of the business plan in your head is simply to understand that when the trade goes $1,000 into profit, that you move your stop loss up into break even. When it goes into $2,000 profit and you don't want to take the profit yet, then you move your stop loss up to about $1,500 in profit. So that if it comes back from there, you still make $1,500. But if it carries on going, you could make $2,500, $3,000, $4,000, depending on how the product is running. So you move the stop loss up. And in fact, in many cases, when you see a new trade developing, you double up or add to the trade and make the trade bigger. Move the stop loss up, make a bigger trade, almost like a second trade, like you would normally do when you were losing, to hedge and try and get your money back. Only now you switch your thinking around and you're in profit. You do the same thing to make more profit. Because generally, when a price is on the move, it kind of stays on the move. And if you get a trade like that, grab it with both hands and run, man, because that is going to be the trade to die for. That's your business plan. 2 steps. That's it. Nothing tricky, nothing scary, nothing unusual. Easy to follow, easy to use, and so simple. I know a lot of you won't be able to get around the 50-50 principle and understand that the market's a 50-50 game. But the sooner you understand that the squiggly lines are human beings, the sooner you'll understand that there's buyers and sellers in the market, and the sooner you'll understand that as human beings trading with money against you, that your chance is basically you against them, your word against his word, your money against his money. Same thing, guys, same thing. It's not unusual. And I understand why people don't get it. It's, at the end of the day, there's a fear in your mind that is working against you. It's been with us since the dawn of time. We tend to get a lot of fear in our minds about anything, and especially money. Okay, so if we're losing, we don't want to lose. Our brain is telling us you can't lose, you mustn't lose this money. So whatever you do, double up on the trade and try and save that money and get it back. And then what it does, it gets worse and worse and worse and worse, to the point where you can't take it anymore, and the loss is so big that you just have to get out of the trade anyway, or you blow the account. When you go into profit, you look at a small profit. Now you targeted $2,000. You're making $300. You look at it and you think, got to get out of there. Got to take that profit before it gets taken away from me. No, no, no. You haven't lost anything. You're still in the trade. What you can do is move your stop loss up to cost, and then your trade is for free. You haven't lost anything. You've won $1,000 because you paid $1,000 for the trade, and now the trade is for free. Simple. Don't think of it as losing that profit. Think of it as, I'm going to try and make this the biggest trade of my life. I'm going to try and make it into a huge, humongous, gargantuan profit, because if I can do that, I've covered all those little trades, all those little losses. Because you're going to find your trading, when you do it this way, there's going to be a mishmash of little profits and losses, because you're going to take quick losses, right? Because that's what I'm teaching you, take quick losses. So you want small losses, but there'll be a whole bunch of small wins in there as well, because of moving your stop loss up and it coming back and taking your stops out and that sort of thing. Or you just felt that the market was turning against you and you got out of the trade, and so on and so on. There'll be a bunch of mishmash little losses and profits in there, and it'll show you having a nice win rate most likely, and you'll think, oh, I'm a winner. But that's not what you're looking for. The business plan is you're looking for the big win, and that's what you actually are following. Guys, go down to the description, get your free Forex book. I said there's a free gift. It's a free Forex book. It's about trends. Go and get it. Go and enjoy it. It's totally free. It's a PDF. Download it. There's 3 ways I trade in the market. One is with trends, and that'll be in the book. The other one is in a range, and the other one is at overbought, oversold levels. That's the 3 methods. That's it. End of story. We trade with support and resistance. We trade with supply and demand. That's it. No indicators, no BS, no lagging indicators telling you to trade when it crosses here and moves there, or waiting for the stars to align in the left and the moon to turn into green cheese before you take a trade. Very simple. Support and resistance. You see the price running, you take the trade. That's it. End of story. Nothing complicated. Every day I do put a trade of the day out for everyone to see. Everyone can go and have a look at the trade of the day. It's just an idea. It's not trading advice. And it's there so that you can just have a look at what I'm doing, what you're doing, and see if it kind of aligns with what you want to do. All the members who join me on YouTube and join the membership, they get a video with a rundown of the market every single morning. And they also get, on top of that, a list of the trades, which way I think they're going to go, up or down, sell or buy, that sort of thing. So that also helps. And whatever other benefits come with a membership, as we go. There's a lot of things, they get first look at the videos and all that sort of stuff. There's a lot of things that you're going to get beneficial from that area. They get contact with Uncle Rob. That's great. Fantastic. I am going to be looking at bringing up a way that we can make good contact and that sort of thing. So guys, I want to thank you for watching. Don't forget to come back and watch the next video. Tomorrow we should be live. Actually, no, we might not be tomorrow, but we'll see how it goes. I'll let you know, but don't forget to come back and watch the next video. We have the standard videos like this every Monday, Wednesday and Friday, and we have the Saturday rundown on the markets. We have the membership videos every single morning on what's happening in the markets, and we also have the live videos on Tuesdays and Thursdays. Tuesdays Euro session, Thursdays USA session. Guys, thanks for watching. Till the next video, cheers, thanks, and bye.